Hi everyone, my name is piterpakulski. Today we'll continue with modeling of an apartment complex. We will continue creating financial model of an apartment complex from scratch. And today we will be building the cash flow statement. This is the main statement where you can see the profitability, the structure of revenues, expenses, inside operating, investment, and financial activity of your business idea, of your project. So if you find this video valuable, you may give us a like, subscribe our channel, share this video with your friends. Also, you can order a financial model from scratch. We can help you with that. So let's start modeling. So I'll just create the timeline. So this will be the beginning of our table. So we'll start with revenues. So basically speaking, cash flow statement is a completely automized table. We don't put any manual data here, so we don't have inputs. So these are the revenues. Then we add direct costs, so we just travel through the model and find the red lines with direct costs or revenues or any other cash inflows or outflows, and link them to the statement. So it is quite an amazing process to see how your business idea is gathered by blocks. After this statement, when this statement is done, the owner of the business idea, the future entrepreneur, gets acquainted with his business idea financial efficiency for the first time. Says, well, now I know what my business idea is. Then he starts playing with different scenarios, different inputs. He creates scenarios to feel his business idea better. What are the weak points? What are the strengths? So these are direct costs. These are fixed costs. Fixed costs we will take them from here. So in this table, everything is optimized. We don't put any data here. So only formulas. It is very important not to put here data manually, because when you start playing with scenarios, you forget where you put the manual numbers of inputs, and by doing it you make mistakes. You forget where you put the manual data, manual inputs, in which cells inside the cash flow, and this creates numerous amounts of mistakes. View, we can group data, group fixed costs, then we will add a payroll, here it is. So here we can see, by the way, seasonality of fixed costs. So here we can see everything what affects our business idea, from payroll, from fixed costs, from direct expenses. We will group this also. So let's walk through the model. So we have, here is the revenue generating algorithm. The revenue will already taken, hold into the cash flow. Investment plan, we're about to do that. Here it is. Then direct costs, we are done with that. Fixed costs, we are done. Payroll, we are done. Loan will be added inside financial activity. So we are adding taxes. I will add some lines here for taxes. So here we will name a new block of inputs, taxes, tax, then we will add rate, so for example, revenue tax, then profit tax, payroll tax, asset tax. So these will be the value. For example, we'll have $20,000 per month the value of asset tax, payroll tax. These values will be the percentage values. Revenue tax, for example, will be 3%, profit tax will be, for example, 5%, payroll will be, for example, 7%. These are the inputs, so we mark them with specific color like this. So now we are adding taxes up here. Here will be their place. We'll do it like this. Delete these lines. The revenue tax, we will take the revenues from here. The tax rate will be taken from here. We are freezing column and row by freezing the cell. Profit tax, we will wait to till the end of the cash flow statement. Payroll, we are taking this line, multiply this, freezing cell of the tax rate. Then asset tax, we take the value of the asset tax and multiply it on 0 or 1 if we do or do not have an operating activity at this moment. So I'm going to search this line. Here it is. No, 0 means that we don't have operating activity, and 1 means we do have at this moment. So now we are creating totals for the taxes. We'll extrapolate this formula to the So what's next? So now we're creating the result from operating activity. So this is the first major line that we need. This line shows us how our business performs, just shows the clear picture of business itself, without loans, without investment, just business itself, just revenues minus direct cost, fixed cost, payroll, taxes. So this is only the business itself. I'm just taking this minus this minus this minus this. So this is the first line that you have to pay attention to. So now let's add the investment expenses. Investment, we will take investment from the, here it is. So with investment articles, this will be the total for investment. This will be result from investment activity. This is the second major line inside the cash flow statement. We'll take this value with minus. Pay attention, because the investment is an outflow of capital. Now we will extrapolate this formula to the right. So this is the investment.
Where an operating activity starts. To this moment when we are seeking for the tenants. And here we have the first revenues. And here we have the moment when we start operating activity.
So we will just group this. Group this. Then it's time for us to move to financial activity. Here will be equity. Then we will add a loan. When we take it, then this line will be when we pay principal. These are expenses. Then interest payments, these are also expenses. So equity may be the only manual line inside the cash flow statement. Also we can automate it. I will show you how we can do that in the next. So here
we just put here when we take a loan, then principal payments, then interest payments,
then we are extrapolating this story to the timeline.
Here we will place the result
of financing activity. This will be equity plus loan minus payments minus payments. This is the third important line. It shows you how mainly the loan affects the financial efficiency. For example, if you have a profit and you have a total loan payments, you can divide the operating profit by the total loan payments and see the percentage of how loan payments affects your operating profit, how stable your business is. So this is a very important ratio. It is called coverage ratio, loan coverage ratio, if I'm not mistaken. So then we have cash balance at the beginning of period, and finally we have cash balance at the end of period. So this will be the last line of the cash flow statement. Here cash flow statement will end. So here we'll put just a 0 because this is the first month. Then we are taking this value from operating activity, the result from operating activity, adding result from investment activity, adding the result from financing activity plus 0. Then we place this value here. Then we extrapolate this formula to the right, and then we extrapolate these both formulas to the right. So now we have what we have. We have cash gap. We have losses here. So we just have to create some scenario to make it happen profitable. So I will just group this story. Group. We still need to calculate the profit tax. If revenues minus this 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 is less than 0, then we put 0. Otherwise we will take all this story if it is positive, if the text base is positive, if the text base is positive, more than 0, if positive, so then 0. If it is positive, we will multiply all this story on the tax rate, like this. So if this more than 0, then we put 0. Otherwise we do like this, closing brackets, press enter. We'll have 0 here because we have losses. In this area we'll just create this will be our next step. So this is the revenue tax. So I guess we are done with cash flow statement. So in the next videos I will show you how we can finalize and know what will be the amount of financing that we need to start the business, what is the payback period, and then we will have a final overview of the model that we've created. So if you find this video valuable, you may give us a like, subscribe our channel, share this video with your friends. Also, you can order a financial model from scratch for your unique business idea. We can help you with that. So see you next videos. Thank you and bye.